When you swipe your card or tap your phone to pay, the transaction feels simple, but behind it lies a complex global network. This network involves banks, payment processors, security checks, and communication systems, with Visa and Mastercard as two pivotal players. Most people assume Visa and Mastercard are like banks, but they are not. They don't issue cards, lend money, or set interest rates. Instead, they are technology and payment network companies whose primary job is to move money securely between banks and merchants. They make the digital payment system work, ensuring transactions are encrypted, fraud is minimized, and communication is instant. So, how do they earn billions of dollars each year without lending money? The answer lies in fees for using their networks, data technology, and global brand trust. Think of Visa and Mastercard as highways for money. When you buy something, the payment request goes from the merchant to your bank. Your bank checks funds or credit, and the approval signal travels back to the merchant, completing the transaction. Visa and Mastercard operate the communication and security systems that make this process fast and reliable, enabling the transaction but not funding it. Your card is issued by a bank, like Chase or Capital One, which decides your credit limit, charges interest, and manages rewards. Visa and Mastercard are simply the network the bank uses. They earn money almost entirely from fees charged to banks and merchants for using their payment networks. Every time you swipe, tap, or shop online, Visa or Mastercard earns a tiny transaction fee for processing. These fees are very small, often a fraction of a cent, but billions of transactions happen daily, accumulating into billions of dollars. Merchants also pay a fee called the merchant discount fee when accepting card payments, part of which flows to the network. This covers fraud protection, data encryption, and instant authorization systems, which merchants are willing to pay for to increase sales. When you use your card internationally, Visa or Mastercard charges cross-border fees for currency conversion, routing, and security checks. These fees are very profitable because international payments are more complex. They also provide data and technology services like fraud detection, payment security analytics, and digital wallet integrations. Finally, branding and co-branding partnerships, such as with airlines or stores, generate revenue as banks pay for the right to issue their trusted cards. Their business model is powerful due to low risk, global scalability, high profit margins, and ubiquity. They don't lend money, so they don't face loan defaults, and every new user increases transactions without significant cost. Visa and Mastercard are very similar. Visa has the largest payment network, while Mastercard has the second largest. For most consumers, the bank issuing the card matters more than the network itself. In summary, Visa and Mastercard do not make money by lending. They operate the secure network that allows electronic payments to happen. They charge small fees on every transaction, plus service fees for fraud protection, currency conversion, and payment technologies. So, every time someone pays with a card, the merchant completes the sale, the bank processes the credit, and Visa or Mastercard earns a fraction of a cent. Multiply that by billions of transactions daily, and you understand their success. In short, Visa and Mastercard are the digital highways for global payments, earning a tiny toll every time someone uses their card.